Thanks for clicking! All eyes were on the Bank of Canada this morning as it was set to make its first interest rate announcement of the year, with opinions mixed as to whether or not the bank would hold or cut interest rates. We got our answer at 9:45 this morning when the bank did indeed cut interest rates by 25 basis points.
It's all coming together. It's all coming together. This is it.
And Bank of Canada Governor Tiff Macklem and Deputy Governor Carolyn Rogers held a press conference shortly thereafter, where Canada's journalistic heavyweights used their valuable time before the central bank governor in the serious economic times to get a holistic understanding of the economic challenges facing us.
What are you folks going to be doing on Saturday morning or Saturday afternoon? And what comes next?
That was from the CBC, Canada's national broadcaster.
He was the best guy around.
No, but seriously, to my surprise, the majority of the reporters were actually very locked in, asking fairly nuanced questions, or nuanced for them, about the bank's plans in the face of these tariffs. So what I want to do today is very briefly go over the bank's interest rate announcement, take a look at the press conference held thereafter, and then discuss some implications. Now, today marks the first of 8 press conferences that the bank is going to be holding throughout 2025. I had announced during my December video that this year we would be keeping track of not only how many times the Bank of Canada governor was asked about rate cuts, as he was asked 36 times in 2024, but also track which news network was doing the questioning, and then at the end of the year, we'd send off the 2025 award for excellence in Canadian journalism. So I do have the award ready. We've got the guy on top here looking pretty distinguished because it's a distinguished award, and we've got the guy on the bottom celebrating the distinguished award, and of course we have the plaque for the 2025 Excellence in Canadian Journalism Award, and we'll put the name at the bottom based on whoever wins.
Challenge accepted.
Well, as we'll see today, we only had one rate cut question during this conference coming from CTV, as the majority of reporters appear to understand the gravity of the current situation. We will obviously continue to track how this all plays out on this channel. Make sure you click like and subscribe to get those updates, but for now, let's get into this rate announcement. On to the announcement. As mentioned, the Bank of Canada announced this morning it would be cutting interest rates by another 25 basis points, bringing the policy rate down to 3% and the prime rate down to 5.2%.
I think we're in the clear.
Yeah, I wouldn't get overly excited about these rate cuts, as the bank made it very clear in its policy announcement that it is concerned about these tariffs coming from down south, mentioning tariffs 4 times in the interest rate announcement, and noting that if they came into play, Canada's economic resilience would be tested. With that said, if these tariffs don't materialize, then the bank was upbeat on Canada's economy, noting that the interest rate cuts are working, household spending is increasing, and the economy is expected to strengthen. But of course, the big question on everyone's mind is these tariffs, which are obviously going to dominate the news cycle at least until Saturday, and probably thereafter, regardless of whether or not we see them. What exactly is the bank going to do?
As we consider our monetary policy response, we will need to carefully assess the downward pressure on inflation from weakness in the economy and weigh that against the upward pressure on inflation from higher input prices and supply chain disruptions.
And yeah, that's going to be the crux that's going to continue to play out, with zero people on earth knowing how this is going to work. On the one hand, tariffs are inflationary, but on the other hand, the damage that they will do to the economy is going to be, at minimum, disinflationary, if not deflationary. In this rock and a hard place battle facing the central bank was on full display during the press conference. On the one hand, the bank having to keep a lid on inflation, on the other hand, providing enough economic stimulus to smooth the pain from these tariffs, which we saw on the first question. Is the Bank of Canada considering quantitative easing? Would the bank be willing to print money if we saw those tariffs?
But do you think quantitative easing will be one of the tools that you can resort to?
And on this, the governor kind of showed what he thinks about the quality of the questions he usually gets from the reporters, as he just assumed the reporter was asking about rate cuts.
So I think what you're saying is, your question is, what's going to happen to interest rates if 25% tariffs are imposed?
But the governor didn't say that QE was off the table, only noting that we would have to have a high bar for it to be implemented.
And the bar for using quantitative easing should remain very high going forward. We're a long way from that, and we have plenty of room with our policy rate.
Great.
And of course, that's not a no. Given what we recently heard this week that the fiscal authorities were considering fiscal stimulus similar to that of the pandemic, I'm not sure how the central bank, how these authorities can avoid quantitative easing without blowing up the bond market, but of course that question wasn't asked. Even though on Twitter the day before I had actually asked Bloomberg if they could ask the Bank of Canada that question, would the bank be willing to print up money for the government's fiscal plans, which of course Bloomberg didn't, waiting until the end to ask why the bank wasn't telling us where interest rates were going, and given the previous uncertainty for the past 30 minutes, was kind of a ridiculous question, which even the governor noted.
Well, I think the answer to that's pretty simple. There's a lot of uncertainty out there, and it just didn't seem very useful to provide guidance.
But the reporter's question about QE was not the first time that money printing was danced around. With the Financial Post asking if the central bank can only raise or lower interest rates, then what exactly is its function throughout this process?
If you only have the policy rate, can you just explain to Canadians what the Bank of Canada's role is in a trade war scenario?
Look at Roger's face. She knows very much that they have other tools, quantitative easing, but no one wants to say it. And the governor continued to dance around the problem, noting the limits of monetary policy, which he reiterated at the end.
The reality is the economy is going to work less efficiently. Canada is going to produce less. It's going to earn less. Monetary policy can't change that. It cannot offset it. What it can do is it can help the economy adjust to that and to try to be a source of stability through that adjustment. So the adjustment is less unpleasant than it otherwise would be. The other thing I'll say is that, we have got inflation back down around 2%. We've lowered interest rates substantially. Growth is picking up. So the economy is in a better place. Monetary policy is better positioned to be able to react to developments and be that source of stability.
And that sort of non-answer tells me that yes, QE is very much on the table. The bank can lower floating rates, they can lower short-term rates by lowering the policy rate, and if they decided to engage in quantitative easing, then they can also lower fixed rates. And given that inflation is back down to 2%, which the governor was quick to assure us, I think the governor thinks that leaves them some room should they need to really drop rates, should they need to print money. So, judging from the answers from these questions, it looks like the bank is willing to print if it needs to, and then it kind of went the other way.
Does the bank see potential tariffs as a one-time increase in price levels?
Which is definitely a good question. Are tariffs a one-time hit? Do we get these retaliatory tariffs? We get the increase in prices stemming therefrom, and then that's it. We shouldn't expect any more inflation. Which of course is not how it works. Those price increases come into play, and then, lo and behold, people want raises. They don't want to just accept the lower purchasing power brought on by even that temporary one-time hit inflation. We just did this, and the governor alluded to that problem.
Well, if we do our job properly, yes, it's a one-time increase in the price level.
Not always some
So yeah, the governor is saying that there is a limit to the amount of stimulus that the Bank of Canada can provide. This is a very tricky situation. Tariffs will hit the economy and inflation at the same time. The real question lies in which hit is going to be stronger.
What happens to interest rates will really, what I think we'll be looking at is the weakness in the economy and the downward pressure that's putting on inflation, is that bigger than the upward pressure coming on inflation? And if that's the case, monetary policy can be more focused on supporting growth. On the other hand, if the inflationary consequences come through quicker and are bigger, monetary policy is going to have to be more focused on guarding against ongoing inflation.
So yeah, throughout the conference, we can really see a central bank that's not exactly sure what it's going to do. It knows it's in between a rock and a hard place. It's going to be facing inflationary pressures stemming from tariffs on the one hand, whereas on the other hand, it's going to have a severely weakened economy, an economy crying out for stimulus heading into an inflationary environment. And this uncertainty was obviously on full display throughout the conference, as Canada's reporters actually did a fairly good job for Canada's reporters at trying to get the governor to go over what the bank thinks of the overarching situation. And then about a half hour through the conference, after all of that, we got CTV News.
Preemptively basically ask yourself a question, so I'm going to put it back to you. What would happen to interest rates if there are tariffs?
We're gonna win!
So, first conference of the year, we have the first rate cut question of the year, a question the governor was never going to answer, after the governor, for the past 30 minutes, had basically said he didn't know what the bank was going to do. So, all in all, the Bank of Canada has cut rates by 25 basis points, but this is a Bank of Canada that isn't sure what's going on, very much like the rest of us. We are looking to the central bank for answers, and, of course, as with the rest of us, the Bank of Canada does not have any as of yet. And that's not even to mention that we're all still awaiting February 1st. I'm still of the opinion that those 25% tariffs are not coming on February 1st, though it appears more and more like I'm becoming more and more in the minority. We will obviously have an update out post February 1st on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.